Hello and welcome to another episode of Nothing Ventured with me, Arish Shah. Today, I am super excited to have with me Akriti Dokania. Akriti has until recently been partner at Ridge Ventures, where she has been investing in B2B enterprises, but is now exploring something new. Before that, she was at Octopus Ventures and held various product management roles at Microsoft and Amazon, including being on the team for Windows 10. She founded Codabuy, which helps startups in India with product development. Akriti's experience spans working in different regions, including the UK and the US, and she currently serves on the board of several companies. Her focus is now on exploring growth in technology and old-school industries while navigating the unique challenges of venture capital in today's market. In today's episode, we talk about how pivoting is the only thing that makes a company survive.
Pivoting is the only thing that actually makes a company survive.
Why patience, coupled with courage, is the key to success.
I think what you need is not just patience, but boldness and courage.
Why you can go after niche markets and get to venture outcomes for the first time.
For the first time, you can actually go after niche B2B markets and make venture returns.
And how VCs look for the best founders, not the best countries to deploy in.
You want to deploy in Europe, in London, in the US, across the best founders, not best country.
And why you should be positively aggressive in life.
Positively aggression is a very good thing.
And finally, why you should just ask, what if this could work?
We have seen how the US has succeeded when it had what if this could work mentality. I think that's exactly what is happening with this new generation.
Let's get straight into it. Hi there, guys. Whilst I've got you for a second, I thought I'd reintroduce myself. My name's Arish. I'm the host of Nothing Ventured, the podcast where I talk to the people behind the stories that make the venture ecosystem go round. I'm also the founder of Emerge One, a consultancy that provides fractional CFO support to venture-backed tech startups from seed to Series B and beyond. If you enjoy the podcast, we'd really appreciate it if you could like or subscribe wherever it is that you listen. And should you ever want to talk to me about anything, do reach out on LinkedIn or on X. I'm always up for a bit of a natter. Right, let's get back into it. Akriti, really great to have you on the pod. Thank you so much for joining me. I know it's early morning out there in Boston, but really wonderful to have you here.
I'm very excited. Yeah, looking forward to our conversation.
Amazing. Well, let's dive straight in, right? So many founders believe that pivoting is a sign of failure, certainly here in the UK, I would say, but it often leads to growth. So how do you see this paradox playing out in your companies? Whether those that you've invested in or whether those that you've built or are building, especially when those early narratives can conflict with the need for adaptation?
Oh, that's a great question. Pivoting is the only thing that actually makes a company survive. And I'll be as bold as to say that.
Wow.
Because some of my best performing companies have pivoted at least 20 times in their first 2 to 3 years, actually, before they found the inflection point. So I think what you need is not just patience, but boldness and courage. And that is the boldness and courage. When things are looking up, like all investors are going to flock around you and give you money and really cheer you on. And that's not when you need courage to build a big company, because you'll have enough support.
Yeah.
The courage, when we talk about entrepreneurship or we talk about courage in the early days, it is literally equivalent to pivots. So pivot is the only thing that I think actually shows true growth. And it is even more true in this market right now.
Yeah. So the way I think about it, a lot of the apps that we know, Stroke Love, Slack, is the obvious one, right? A lot of these companies started off in a completely different domain, completely different use case, and then pivoted really hard, right? Same core tech, but actual use case completely different. And as you say, that is what caused them to be successful, right? Like at the end of the day, their original product or their original kind of use case wasn't working out. So they had to move on from that. And the way I think about it as well is that if you are that arrogant that you think that your product is fit for market day one, there are probably a hell of a lot of other lessons that you are about to learn the hard way, right? And there's companies that I've worked with that pivoted hard. I mean, one of the companies I worked with that exited for a reported 300 mil a couple of years ago, started off as a restaurant booking app and ended up as something completely different. Although it still had some restaurant bookings going on. But I guess, and you've been both in the US and the UK, and you've worked with founders on both sides as an investor as well as a builder yourself. But do you see that kind of difference in approach in the US versus the UK? Because I think in the UK we have this almost fear of failure, fear of kind of doing the wrong thing and looking bad in front of our investors or our team or other people and supporters. But do you see that there's a cultural kind of difference between the US and the UK in terms of certainly pivoting and other things?
Yeah, like there's lots and lots of cultural differences, to be honest, between the UK and US founders specifically. I've had the privilege to work on both sides, and I think both sides of the pond, founders are just like they're visionaries, they have an idea, they want to go to market. I think the ecosystem in the US is just deeper than the ecosystem in the UK. So obviously that enables cultural behaviors. So what I mean by that is you can take more risks in the US because even a really silly idea will be able to get some money to be like, hey, let's go figure it out. Everybody here in the US will always be like, let's go, this can work.
Yeah.
Most people in the UK will be like, I don't think this will work.
Yeah,
I think there's a whole like cultural sentence that really plays like consistently on a CEO or a founder's mind.
Yeah.
That if you're constantly being told that this is not going to work, I think it really reduces your courage, even if you started at the same position.
Yeah.
And I think being a founder and running a company is 2000% a mental game. And 100% a market product team game, but it's 2000% a mental game. So I think that's the environment that UK is in, which was hard even as an investor, to be very honest with you. And I had a lot of fun because I did deep tech, and that's what is UK amazing at, and I still think it's the best at. But when it came to workflows, B2B, I think it struggled with it because we just saw US counterparts growing much faster, getting bigger deals just because of like the ecosystem enabling them to do so.
100%. I think, so the way I think about it again is like US we'll figure it out, right? Like don't sweat the small stuff, we'll figure it out over time. In the UK, and especially the investment side, because a lot of investors have not come from, certainly haven't come from the US, but haven't been operators necessarily, don't have that operator mentality, and more kind of from private equity, finance, IB background. There is very much, okay, why is this not going to work, rather than what needs to be true for this to work, right? And I think exactly as you say, that plays on founder confidence, right? Which makes it a lot more difficult to build, I think, in that environment. And I mean, hopefully that's changing, but I guess time will tell. I mean, the other reality is that the UK as an ecosystem, as you said, is less deep. That's also because it's a lot younger, I guess, than compared to the US ecosystem.
Yeah. Absolutely. And honestly, frankly, it's not just the investors, right? Even founders from an ambition perspective is different. Like founders here in the US want to go after $1 billion ideas. They want to go for nothing less than building a 100 million ARR company. A lot of founders in the UK are okay with a 5 million ARR company and selling at 50. And that's actually a great outcome for a founder. Might not be a great outcome for an investor, right? So I'm just saying, I think it's not just like the ecosystem is not just built by one side. So like, investors also react to founders and founders react to investors. And Silicon Valley has existed for 50 plus years.
Yeah.
The UK ecosystem has existed for 10 to 15 years.
Exactly.
Like, we're just talking about a magnitude difference, which enables ambition, cultural behaviors, and all of that stuff. And that's changing like very rapidly. Like 11 Labs is out of the UK, Lovable, Sweden, and the UK. Like it's changing rapidly.
100%. You touched on B2B a bit earlier. So, whilst operating in the B2B sector, you have seen stark differences in the growth expectations from just a few years ago. So what does this say about the kind of underlying assumptions around market opportunity and risk? And where do those assumptions start to kind of break down or falter? Because again, right, we've gone from triple, double to if you aren't going from 50 million to 100 million in year one, that's going to be problematic. So yeah, what's your take on that whole situation?
Yeah, I think different business models ask for different assumptions. So if you are in the bucket of lovables, emergence, and things like that, things like that, you are going after individual buyers. You're going after vibe coders. You're going after individual businesses, SMB. You're growing at a different speed than big enterprise deals. So I think the business model still sticks. Like if it's a business, it's all a business model game versus every company should be growing 10x at this point or else I'm not touching it.
Yeah.
The second thing that I'm seeing where the assumption is that it's breaking down is that some companies actually find their inflection after multiple pivots. The business models still make sense. You still need to follow a business model. I think the ones in SMB, we are asking for 10x growth because we can see that you can get the 10x growth. You're not seeing the 2x, 3x, and it's phenomenal. And with lesser number of people, because AI can help you do that, right? So if you are smart, going back to the pivot and going back to the experimentation mindset, if you're a founder who can experiment, who can really build out tools and automations and actually help you, enable you, I think you will go really far. On the industry side, so if you're selling to enterprises and stuff like that, we're still seeing a lot of consulting plus building out the product. And consulting, there is real AI budgets. Like in the US, at least, there are real AI carve-outs, AI budgets, and people are putting money where their mouth is when it comes to AI. So even those companies are getting big contracts. The sustenance is the question that we constantly have. Will they renew? Will this NRR number stick? Will this company actually expand and do 5 more agents or build 5 more tools or expand from AI operations to something else? So I think that sustenance piece is still something that we're working on and figuring it out. But I think on the SMB side, we are seeing those kinds of growth if the founder is ready to experiment, try different things, stick to something that's working versus being distracted. You are getting help from that ecosystem to push you even further ahead. So I think it's a self-fulfilling prophecy of okay, I'm going to work hard, figure out this one niche or figure out this one kind of tool, and I'm going to use that to extend my revenue. So those assumptions are definitely there and they're working out. Honestly, also, the last thing I would say is that they're just bigger outcomes now. So if you see OpenAI, Anthropic with billions of dollars of revenue within 3 months and 5 months, your just outcomes are going to be much bigger.
Sure.
We've not had that in the last 10 years. No SaaS company has been valued $1 trillion immediately, 2 years or 3 years out of their being with 18 billion of revenue. That's not happened. It's not just valuation. It's also the revenue you have to see. So I think we're in unprecedented times.
They've recoupled, right? Valuation revenue have recoupled compared to even 5 years ago where you had, 50x revenue multiples on a SaaS business doing 5 million, in top.
Correct.
Yeah.
Exactly. So I think there will be some stabilization. I don't disagree with that. But I do think that the outcomes are bigger and the market is ready. We've had a 11-year, 12-year bull run in the market. That means there's liquidity in the market. That means people have made money. That means the pie has become bigger. Therefore, we can have bigger IPOs. So I'm actually quite positive. And I am not on the doom gloom side of this seesaw. I'm actually very much listen, this is going to be a big deal. And we are getting to watch it and be in it, hopefully make some money in it. All of those are very, very true for people in this space right now.
I think one thing that I'd really love to kind of explore a bit deeper as well on what you said, right? I feel like 5-6 years ago, SaaS tools for SMBs, SMEs, so smaller businesses, even your kind of high street businesses was just a really tough nut to crack because, they often had disparate data. They, weren't necessarily the sort of people or teams that would buy software inherently. They often ran on manual processes, all this sort of stuff. And, I've seen time and time again, startups that think they'll crack the SME market because it's so big and then realize that it's so fragmented that it's almost impossible to crack, and also just has less money generally, right, compared to, say, mid or large cap enterprise. What I think is happening right now is that there's never been a better time to build for SMBs, because you can now build very bespoke tooling for them in a way that you couldn't in the past, right? So all of a sudden, really, you and I talked about some of the very old school businesses that I've been involved in the past, trading businesses or whatever they may be, right? All of a sudden, those become ripe for automation in a way that wouldn't have been possible even 5-6 years ago, or would have cost a lot more 5-6 years ago. And I think the interesting thing is, I'm seeing it in my own business, I'm seeing it elsewhere, is you can, if you have just the bias for action to go and pick up one of these tools, whether it's Claude, whether it's NAN, whether it's ChatGPT, whatever it is, right? And just send that first prompt, right? I'm thinking about automating this. How do I do it? Like you can do that. Now, a lot of people still won't do that. And I think there was some research that came out that said only 13% of the world is using AI today, right? But what that means is that 13% can go back to the other 87% and say, here are some tools that can help you. Do you think that is going to increase or improve? Like, do we think that finally there is an opportunity to crack that SME market?
Yeah, I mean, it's like absolutely. I think all your points are very valid here. But for me, it comes down to the reason venture investors didn't invest in SMB was, one, it was fragmented, but the cost of development was very high.
Exactly.
So if you're spending so much money to actually develop software, you rather go get big tickets and have good payback and quick, sell to enterprise. Because if you're really going after and doing all the hard work, you might as well go after like the big shiny object,
the big money,
versus trying to go after. So now, if the thesis is like, hey, actually, cost of development has gone down, that means that the cost to get to the SMB from last time around has become smaller. The go-to-market has become tougher because everybody's going after SMB. It's easier to build. So like you said, customized software is possible and can be made general now very quickly. And to the go-to-market, to the fragmented markets, is possible because I don't have to spend 2 times. I don't have to spend for software and I have to spend for go-to-market. I can still just spend for go-to-market and get to those customers and have an ROI return that I wanted. So for the first time, you can actually go after niche B2B markets and make venture returns, because you can do this with 10 people. You do not need to have 200 people. And that changes the game for venture.
They've only been going a couple. I've said this a couple of times, and as I mentioned to you, I'll be interviewing the founder of Emergent shortly on the podcast. But one of the facts that he threw out at me, and they've only been going a couple of years, they calculated that if all of the apps that had been built on Emergent, and for those that don't know, Emergent is sort of very similar to Lovable, but focus on back-end utility and productization rather than necessarily UI UX. But what he said was, if all of the apps that have been built on Emergent had been built by a development shop, so like a dev agency, the total cost would have been something like $1 billion. So it is, like, to your point, it's just collapsed that cost down to near zero, right? Which is just an incredible thing to be seeing.
Exactly.
We talked a little bit about the US and the UK, but there is this common notion, I guess, that US startups have better access to capital compared to, say, their UK counterparts. But you have seen success on both sides and have invested on both sides. So could you explore where you think that belief might mislead founders, especially those that are looking to scale?
It's the size, right? Like at the end of the day, US is just much, much bigger than the UK. So we definitely have more money. The economy is just a bit bigger. So listen, at the end of the day, like, yes, there is more money in the US versus UK. But consistently, I've seen programs like EF, programs like Y Combinator actually getting a lot of UK founders, European founders in the cohort. So that's very early stage. Before even you think about scaling, there are opportunities for you to like look up, get on the internet. Like, the availability of information is so amazing right now that there is no barrier to geography. I genuinely don't think there's a barrier to geography right now, because the availability of information, people want to be reached out you could become a billionaire sitting in Philippines because you have built an amazing app. Like that's possible today, right? Individually. So I think the barrier to geography is definitely reducing. And the third thing on the scale piece is like, I think there is something around showing up and showing off. I think two things around it. So showing up is a constant consistency around LinkedIn, Twitter, whatever you want to do, or social media, whatever you want to choose, and genuinely showing off the true like nature of what you're trying to build or what you're trying to do. And I think people will follow. So I think it like you said in the beginning when we were talking, you never realize how small things actually make massive differences. How your plot suggested, hey, do this instead of this, and you unlock something insane for your own business. We were just talking about it, right? So I think it's that on the scale piece as well. You will unlock money because there is money. People have raised billions and billions of dollars in their fund, like 4 billion, 10 billion. You hear that in the news. It's real. It's not fake. They want to deploy, and they want to deploy in Europe, in London, in the US, across the best founders, not best country. So when that's the mindset, I think every single founder should be showing up and showing off if they're genuinely interested in solving for a workflow, genuinely interested in solving for a deep tech issue, like whatever it is, you need to be genuinely interested, and coupled with showing up and showing off, I think will be magic.
And actually, I think, we talked about this cultural aspect of the US versus the UK, Europe, just before. That showing off part, I think, is where Europe, and we've had conversations with VCs from the Nordics, from Eastern Europe, from the UK, that showing off part is where Europeans are just naturally less able to kind of really, beat their own chests about what they're doing. Whereas in the US, that I think that that behavior is very normalized, right? Like people are very used to founders saying, we've built the best X, Y, Z. Whereas in the UK, you might hear, we think we've built a good tool that could help, right? Right. So it's all kind of dumbing down, or maybe downplaying, I guess, the value of what it is that they're doing and what they built. And again, hopefully that begins to change. And I think in a truly global market, as you describe, you should be able to stand out compared to others.
Yeah.
But I do think there is a massive cultural kind of gap there, just in terms of how we're brought up and how we're led to act, I guess.
Yeah, I think one of my probably messages would be positively aggressive. I think that's the piece that I would ask people to think. Showing off has a negative connotation.
Yeah.
Being aggressive has a negative connotation. And I don't want that to be the negative connotation. Like, I don't mean showing off and being braggy about it.
Yeah, sure.
But brash about it. So positively aggression is a very good thing. And I think we should normalize that in the most positive way of building a deeper technology, building a better customer that will actually like vouch for you and speak for you and talk well about you, or make sure that you show up to this customer's office and not become lazy. I know it's transatlantic flight, but you do that because you want to be positively aggressive. You do that social media stint to, show off the product that your team has built, show off your team. People you've been able to attract. So I think positive aggression could be a very good thing if you genuinely use it for your company.
Yeah, no, I mean, as someone who has been positively aggressive on socials for some time, I do not disagree with anything you just said there. Yeah, look, I mean, I think, we have tools available. You should use them, I think is really what it comes down to. There has never been an easier time to get yourself out there in front of an audience, and whether that's a very small niche audience on LinkedIn, whether that's a wider audience on YouTube, or whether that's, a consumer audience on Instagram, right? Like there are tools that you can use. It was actually very interestingly, I reached out to a founder recently and invited them on the podcast, and they came back to me and said, thank you so much, really appreciate it, but our audience wouldn't listen to a podcast like this, and we're not fundraising right now, so kind of we'll defer for a while, which is fine, right? And there's no issues with that. But my my knee-jerk response would have been, you just don't know who's going to be listening, right, at the right time in the right place, and actually you've got nothing to lose by coming on, right? Like that's the way I would have approached it. But yeah, as I say, I think people people kind of get entrenched in their own behaviors and then don't necessarily think about how distribution works in today's world. You and I have talked a lot about kind of older industries, right? Which I think are is the beachhead that you are now looking to kind of tackle, right? So a lot of people suggest that disruption is necessary for growth. But what do you think most people miss when they're assessing whether a new product is genuinely needed in the sectors, in these sectors that seem stagnant, or whether it's a nice to have rather than a must have? And actually, do these industries need to be disrupted, or do their processes need to be disrupted? I guess is the more pertinent question.
Oh, that's a great question. I think most companies try to go replace the ERP, replace the CRM, and I don't think that's the right thing. And to your point, I think their processes need to be actually not even disrupted.
Yeah.
You just need to replace their processes, not their tools.
Yeah.
So that's the thing that I think I'm spending a lot of my time, as you said, but older industries are entrenched in a certain way because of a certain cultural challenges, and also because of they've had 20 years of doing this. Like they built the business and made $1 billion of revenue by doing something right.
Yeah.
Right. So I can't go in and be like, hey, I'm going to change your ERP. You need a net new ERP. You need a net new CRM. They are not San Francisco, Silicon Valley kind of people who are ready to uproot everything and just get started with like a net new tool.
Yeah, they're not early adopters of anything necessarily.
Yeah. So I fundamentally think actually this is the era that the older industries actually become AI, immediately get into tech, is because they're just going to skip the generation of software. They're just going to forget that 10 years of software, digital transformation happened and all of that stuff. They're just going to directly go into AI, because for them, having $1 billion of revenue or having multi-million-dollar revenues, running an actual manufacturing unit or running an actual physical location requires human beings, requires manual people around. They can't fathom a world without that. So you can't suddenly be like, oh, software is going to, change everything for you. Go take my software. I think what you have to do is enable these manual workers to be able to do 20% of their work through agents, how we've created automations for ourselves. And 80% still do vigilance and reliability and security and all of that stuff to make sure that things get, because all of these older industries, if you really start naming them down, they're all critical industries. They are apparel, manufacturing units, electronics, we need electronics so that we can communicate, construction, it's actually buildings where we live in. These are all very critical. You can name any of the older industries and you'll see that these are critical industries that are needed, and they need human beings. They need manual people. What we have to do is think about how do we make that manual person's processes better, or automate 20% of their workflow so that they feel better about their day and can now start thinking about hey, is this manual work the right work? Or is this, output the right output? Is this impact the right impact? So that's the piece that I think is going to happen with the older industries. They're just going to not replace and rip and replace any software. They're probably going to, and that's my bet, addendum or attach themselves to 20% efficiency versus 100% replacement.
Yeah, so it's augment over replace. And actually, super interesting what you described there. So I was just out in Kenya, and talking to one of my cousins. So we, there's a business out there, it's business across sub-Saharan Africa in the manufacturing space, right? So it's cold rolled and hot rolled steel and corrugation. These are almost primary industry, right? This is stuff used in construction, and it's fundamental to those sort of sectors. And to your point, very, very people, heavy, despite, the amount of automation that you can put in the machinery, you're always going to need supervisors and people running, running the shop floor. But what my cousin had done is he set up like an AI department within the business, and it's still nascent, so still kind of finding its feet and growing. But the whole purpose is there is an individual now who is dedicated to cross-function, just look at where they can apply AI to, exactly as you said, enhance their processes, make them 20% more efficient or X% more efficient. And again, not replace, but augment and enhance the work that the individuals are doing. And that's a much safer bet. And it's probably going to get a lot less resistance than rocking up and saying, hey, AI is going to replace, everything that you do.
Yeah. Yeah, I absolutely agree with you. And by the way, a classic example of being positively aggressive, I would love to talk to your cousin. Because I'm exploring in this space, and I would love to talk to your cousin if that works for you, because that's exactly. And while I'm exploring on the older industries, he would be a great person for me to like actually explore and figure out what they're trying to build and what they're trying to think through.
And he's like he is now becoming an AI maximalist, I would say. And look, I mean, the entire kind of businesses that we've been involved in over the years are very much those old school industries, and often in countries, and regions where you aren't necessarily able to acquire or would want to acquire the best in class, because that the conditions may not suit, right? So you often, I mean, not that that's the case in this particular business, but yeah, you often have to make do with, a piece of equipment that is maybe 80% of where you would want it to be, because that's what the people in the environment are trained to operate or whatever. And that's where you can then figure out, okay, how do we improve all of that? I'm sure I can set that up. I would be very surprised if I couldn't.
Yeah.
Cool. I mean, I think just to round off on this point around these older industries, it comes back to what we talked about with SMEs and SMBs. Like, these older industries are often the ones that are populated by family-run businesses, by owner-managed, by, very, very small teams that have done things in exactly the same way. They're still using, pieces of paper to record transactions and all this sort of stuff. And that all becomes ripe for disruption. I mean, you're from India originally, and I think about, when I've been sari shopping in India, and there are 6 people in the shop, and you get your sari from here, then you have to give it to that person. They have to stamp a chit. That goes to someone else. You then pay, and then that goes to someone else who then lets you out of the door. Like, again, not saying that all those people will be replaced by AI. Some of it might be, but there is also that balance between, exactly as you put it earlier, right? Like the need to have a workforce that works versus making that workforce more efficient.
Yeah, and I think the other thing that is happening in the market is generational shift, right? Finally, 30-year-olds are taking over from 60 to 70-year-old families, and generations are moving the mantle over finally to give them, like, making them the CEO or making them the AI head or the CTO, whatever, for their own family businesses. So I think, given this generational transfer, I think millennials and Gen Z who are taking over are sitting up and realizing that they don't want to be sitting in the sari shop for the next 30, 35 years. So from a cultural shift, that is the big opportunity here. That right now, when I'm exploring my older industry product, I've been speaking to all second generation people who are taking over the businesses in the last 2 to 3 years. And it's phenomenal what they're trying to do. They're not trying to replace the team. They're not trying to reduce the workforce. They're like, this works. We get the revenue. We have really good margins. They're trying to expand. They have an expansion and what if this could work kind of mentality. And when you have this what if this could work mentality, we have seen how the US has succeeded when it had what if this could work mentality. I think that's exactly what is happening with this new generation, where they're like, what if this could work mentality? And I am betting that history repeats itself. What happened with the country is going to happen with the generation.
Yeah. And I think this comes back to what we were saying earlier, agency, right? Like, it has never been easier for you to not only ask that question, what if this could work, but try it out, right? With very, very little risk now. You can just spin something up, see if it works, and if it doesn't, fine, throw it in the bin and start on a new one, right?
Yeah, classic example is I actually don't get on customer calls. I actually send a demo before.
Amazing.
I'm like, why don't you try it and then let's get on a call? Because I'm not going to show you, I'm not going to like try to explain to you what this could do. The agent should be able to show you and do the work for you. And I've literally sent the link of the demo, like try your own documents, use it, and then let's get on a call.
Yeah.
And they have a very different tone because of that.
Yeah, because you're no longer trying to sell them. They've already seen the value, right? Like it's a completely different conversation. Akriti, this has been an incredible conversation so far. I have a couple of questions which I ask all of my guests at the tail end. So, and it sounds like you may well have a few of these, but what is one thing that you have a contrarian conviction about from any area of life, whether that's work, politics, socially, or at home?
Oh, I think senior living and childcare should be in the same place.
That's a really Indian way of thinking about things, if you don't mind me saying. That's like, so you're basically saying grandparents should look after kids.
No, I think loneliness. I think loneliness is really the highest problem in our world right now.
Okay, yeah.
Old people still have energy because we are living longer.
Yes.
They're actually fit. And we still, in at least America and the Western country, they go to senior living facilities because they don't live with their kids.
Yeah.
And they're bored.
Yeah.
And they need something to like actually like invigorate their like minds with. And kids have like maximum number of questions who need attention from adults to just answer those questions. So it's such a fun, like actual like thing to do where, hey, listen, I put my kid to daycare, but daycare is really hard because it's expensive. And, you know, it's two working people who are constantly running to get their kid at 5 p.m. or 5:30 p.m. It would be amazing if it would be at a senior living facility where the seniors actually are energetic. They have fun with it. They have fun with the kids. So it's not grandparents looking after the kids. It's genuinely old people removing the loneliness, and they have so much energy. And for kids to be asking questions and learning from really like actually checked in minds from between 9 to 5 or 9 to 6.
Yeah.
So I actually don't think that grandparents should raise kids. I just think that they should interact and be grandparents. I think they should not be parents.
I could not agree. I could not agree with you more. And that bidirectionality is really important because exactly as you say, the kids actually learn from the experience, but also, you know, the elders can learn about, okay, how does this new generation think and how are they interacting, and maybe learn that, okay, we're not going to be able to get rid of the iPad because it's there. So, okay, how do we use the iPad to have fun together? Actually, again, really interestingly, as I said, I was in Kenya, and actually I spent the entire time I was there with my parents and 4 of my dad's brothers and their wives. So they're all over 70s. And it was really interesting because I got this one-on-one time with them, and I'd grown up being raised by these people. And that shift now, as they're in kind of retirement mode, they still have energy exactly as you say. They love going out, going for their coffees, their lunches, etc., spending time together. But actually sitting down with them and just giving them really just little bits of challenging questions, you could see that really invigorated them and got them thinking. So actually, I'm not entirely sure why you're not building this, because that sounds like it could be a winner.
It's a real estate problem, actually. I have looked into it. I'm not going to lie. It's a real estate problem, actually.
Yeah, that again does not surprise me. Many things are. Listen, one final question, and then I will let you go, I promise. So that we can get to know the real you, what is something that moves you emotionally?
Ooh, I think family for me. I mean, like I live away from my family. All of my family is in India. So to me, that's like, I grew up in a big household, like you can imagine, lots of cousins, I have 2 older sisters, so I'm a third, and I'm used to loud noises. And America is not loud noises. You have a pretty lonely life here, generally with friends. Of course, you see them on the weekends, but Monday to Friday is very, very busy with work, and like just you're in a cogwheel. So emotionally, it's 110,000% the family and just being around my nephews and having fun with them.
I mean, that's lovely, and I can very, very much align with that thought process. I mean, just as I mentioned, right? Like that time with family, you don't get back, and it is incredible when you have that sort of support system around you. Akriti, thank you so much for joining me on the podcast. It's been an absolutely wild ride. For the audience, where can they find you online? Are you on LinkedIn? You're on Twitter? Where's the best place to find you on the internet?
Yeah, the best place for me is LinkedIn. I generally tend to reply to most messages.
Yeah.
So yeah, if you have an interesting company that you're building in deep tech, robotics, quantum, B2B, send it my way. If you are interested in exploring older industries, or you are building an older industry and you want some help, I'm here to help. I'm spending a lot of time there. And if you're a newly engaged couple, I have a vendor management product that I just launched because I used it for my own wedding last year, which is an agent that reaches out to vendors and does executive assistant work for me, which I've opened to the public. So there you go. You can reach me on LinkedIn.
That is absolutely incredible. And I might well hit you up if you ever get around to disrupting the consulting industry. But for the time being, Akriti, thank you so much for joining me. It's been an absolute pleasure. I really enjoyed it.
Absolute pleasure. See you. Bye.